Hi guys, welcome back. Today we're talking capital growth versus rental returns and what is the better option. Thanks for tuning back in guys. As discussed today, we're talking the age-old question, is capital growth or rental returns the better option? Now, obviously the holy grail is to find a property in an area that's both increasing in value and offering a high rental yield. But the reality is this isn't really the case. Most areas will either be one or the other. You'll be seeing strong capital growth in an area or strong rental returns. As a bit of an example, if you look at the big cities, Melbourne and Sydney, historically over the last 50 years, they've had really strong capital growth in these areas. However, the rental returns remain quite low. A lot of these suburbs in Sydney and Melbourne are still only returning 3 or 4% yield. Versus the regional areas where historically over the last 50 years we haven't seen the strong capital growth that the capital cities have had, but these areas are returning up to 7, 8 or in some cases even 9% rental returns. So it really is a balancing act of chasing those high rental returns or chasing capital growth. And to answer the question of what is the better investment, it's important to step back and have a look at your own situation. To buy into one of the capital cities, firstly, you're looking at a higher barrier to entry. A lot of those suburbs in Sydney now are over $1 million average price point. And in Melbourne, you're looking at sort of that $700,000 as your entry level home. So that does create quite a barrier to entry to save up the deposit to get into investing in those areas. If you're buying a property for, say, $700,000 in Melbourne, and the property's renting for, say, $500 a week, you might find there's actually about a $15,000 shortfall each year between what it costs to own that property and what the property returns. So that means each week you'll have to find about $300 out of your own pocket in order to be able to service and hold on to that property. So even though the capital growth might be great in Melbourne in years to come, and especially has been in the past 20 years, 30 years, if you're not in a position where you can continually chip in and service that property is going to have a negative impact on your lifestyle and may not actually turn out to be a good investment for you. Where if you're buying in a regional area such as Cairns, where you can pick up a property for $400,000 that returns $500 a week, that property is going to be cash flow positive. So that property is actually going to generate you income and pay off the loan by itself. So this isn't going to have a negative impact on your lifestyle and is going to aid you into the future. Eventually, if you're paying that property off using the rental income, eventually you will own that asset outright. So if you are looking and weighing up the odds of chasing that capital growth or rental returns, I think it's really important first to work out what your serviceability is and work out what sort of lifestyle impact it would have if you are buying a negative cash flow property versus a positive cash flow property, and working out how long you could actually hold that property given those two different scenarios. The third option outside of looking for capital growth and high rental return properties is probably the option that I most prefer, and that's finding properties in places with high rental returns, so that's places that are cash flow positive, but actually finding properties in those areas that are below market value. So it may be that there's an option there to subdivide, it may be there's an option there to renovate, or you might be just able to purchase that property below market due to a distressed sale for some reason. So that really is the option that I recommend people look for those below market properties in high yielding areas, as you're going to get instant capital growth. In that first year you might be able to pick up $50,000 or $60,000 equity, and then you've got the continued rental income coming into the future. So there you have it guys, that's my thoughts on capital growth versus high rental returns. Hope it gives you a bit of an insight and gives you a little bit further something to think about if you are looking at buying an investment property into the near future. Thanks for tuning in guys, and as always, if you enjoyed this video, make sure you subscribe. We put out a heap of new content and love bringing you new videos.